Welcome back, everybody. Thursday evening, UK time. Financial Thing. Investment live stream. Hope all is doing well. We're here every Thursday evening. Universe willing, but so far so good. Next Thursday, scheduled to have Peter Reed from Assets Exchange on the stream here answering questions as I grill him live. Hopefully he will be here as scheduled. So if you want to learn more about Assets Exchange, which I think is an interesting peer-to-peer lending company, property-based, move this paper, property-based lending company, and using charities to source their rentals, their buy-to-lets, which I think is an interesting proposition. So I'm interested to know from where I spoke to Peter a couple of weeks, it was about a month ago, where they are with their business. So that'll be next Thursday, 7:30 p.m. UK, 2:30 p.m. US Eastern Time. Peter Reed, Assets Exchange. Today we're going to be talking, we're going to go through some of the peer-to-peer lending news. As usual, we're going to take a look at the Trading 212 portfolio, which is done pretty good this week. Show you an update on that, what's inside the portfolio. Did make a small purchase this week inside the portfolio, so I'll show you what's going on in that. We're going to take a look at some crypto news and look what's going on in the stock market. So yeah, a lot to get to. If you have questions, as always, comments, please hit that thumbs up and leave a comment if you have anything that you are curious about that's going on in the financial world. If I can't answer it for you, I will. We've obviously had a pretty volatile week within cryptocurrency. Of course, all the naysayers thought that the sky was falling, that cryptocurrency was over what it was, and we're going to kind of talk about why that happened, where it's going from here. You know, it's a very interesting, but you know, this is nothing that we haven't seen before within the crypto space. If you've been following it at all for the last few years, you'll know that there's extreme ups and downs. So we'll talk a little bit about that. We're going to talk about what's going on with the Lendy administration, some funding secure administration news, some house crowd news. I actually invited Fraser Fernhead personally to come onto the stream and kind of give us his side of the story with what's going on in the house crowd, which he politely declined. You know, I didn't expect really that he would accept my invitation, but I was kind of fingers crossed hoping that he would. But I'm sure he's under a lot of pressure, and he probably, you know, maybe a little bit concerned about getting in front of the people and explaining what's going on, and maybe some things he's not allowed to say legally. So he did politely decline to do it. I think he's sort of trying to move on with his life, get that mess sorted out. We'll see. But yeah, so what else? Let's go ahead and say a quick hello to everybody that's in the stream so far. Again, please hit that thumbs up. Subscribe to the channel if you haven't already. Colin is first. Peak District, sunny at last. Is that really true? It's very hot and sunny at the moment. Hi from David Alderman in Chiltons, hot and sunny. And Paul Bagworth in sunny Kenilworth. Debbie in the hot Cayman Islands. But it's a lot hotter there than it is in Kenilworth. Hi Paul, new in Stockport. Alan Lomas in Chesterfield. John Morgan from balmy Swindon. Robert Pates from a hot Crete, Greece. Mike Powell, of course, in Southampton. Mark Mason in Epsom in Surrey. Alan Toombs from a warm and sunny Basingstoke. I'm seeing a pattern that actually the weather might be good in the UK at the moment. So Chimpo Naughty is here from Darren, Cambridge, and Alan Stratford in sunny Malvern, just in from a day's gardening. That sounds lovely. Not one of my favorite things to do in life, but I seem to kill everything. But I'm glad that we have some gardeners here. Stephen Hale is here from Nottingham. Nice to see you. Welcome to the stream. Whose kit is Lawrence wearing? Of course. Who else? It's Grimsby Town. Wait, here we go. Harry the Haddock. The boys. You know, I used to have a Bruce Grovelar shirt. I don't know if anybody remembers him. I'm sure you do. But yeah, that one got worn out and thrown away. So tonight we're in the Grimsby town. Up the Mariners. Still not doing well in the football scene, but you know, we have high hopes for the Mariners. Eventually, maybe one day, they'll turn into a Premier League team. I mean, it happened to Bournemouth, you know, but we'll see. Brian is here from Woburn, and Aki Chap from Sunny Accrington, Peter Vince from Leatherhead, Sunshine at Last, woohoo, and Stephen Green is here. Nice to see everybody in the stream. Glad you decided to spend your Thursday evening here instead of getting smashed down at the pub, which I probably would have been down the pub myself, but you know, hey, you want to come and chat about investing, I don't blame you. So we're going to really try to keep it under an hour tonight because things to do, places to go, people to see, and let's get to it. Let's do our ooh, hold on, don't want that. That was the cookies policy. We're going to do our little loan pad update. I'm going to show you the dashboard and what's going on at LoanPad. Total, here we go, LoanPad loans, 29.7 million pounds of loans. If you don't have a LoanPad account and you want to log in, this is what it looks like right here. This is the live data feed that they have, which I think is pretty cool. It shows you the total loan value here. This is the total value of all joint lending partner committed facilities in their loan book, 66.6 million, and then total partner loans, so that's the total value of lending partners committed facilities of the joint loans. We have an LTV, loan to value, of 41%, creeping up again. 80 live loans on the platform, average lender loaning out £10,636. Most importantly, what we see here is this estimated time to invest is very, very low. And very, very importantly, the liquidity on the platform here, estimated time to sell of 1 day. So if you do invest and you decide you need to get access to your funds, this is, I've never seen this over 1 day as long as I've been, you know, looking at LoanPad, which has at the moment some of the best liquidity accessed in peer-to-peer lending. Not always guaranteed to be that way. I do need to move this piece of paper. It's bugging me. But yeah, not always guaranteed liquidity, but it is there at the moment, and it has been as far as I can tell, and as long as I've been in the LoanPad investing side. Here we have the interest coverage fund, which is their version of the provision fund, which is at £40,000, and they've used £21,028 of that so far. So a little bit of coverage there. I mean, you're not going to see a lot of coverage. I think the way the LoanPad's structured, they just don't feel like a lot of money needs to go into that ICF because of the lower risk, you know, aspect of the products they offer. So only one loan right now is being covered by that ICF. Yeah, so really business as usual again. In LoanPad, the average loan size, £371,000. I think this is a very, very key piece when you're loaning through property-backed developments, that I really like these average loan sizes in that range. You know, when you're lending out chunks of million, 2, 3, 4, 5 million pounds, one of those loans goes bad, and that's a lot more detrimental to the platform than a loan that's 370, 200,000, 150,000 pounds, a lot smaller, a lot easier to deal with on the default side. Even though the loan book is big, 20, you know, approaching 30 million pounds, we still have this average loan size at 371,000 pounds, which I think is a good thing. Yeah, so that's what's going on at LoanPad. We're going to look at the news here and see what's going on in the peer-to. Oh, you know what? Let's take a look at the Trading 212 platform. I got everything lined up in here. So you can see here, remember we started at £5,500, and right now we're at £12,506. So approaching, you know, 40%, 35% return, which is great. Well, sorry, no, much more than that. We've doubled the money, and now we're approaching, hopefully trying to hit 3 times of what we started with. My math is completely off there. But this also doesn't tell us the exact percentage of where the return has been, because when you go into cash, sell into cash and move into another stock, it doesn't really keep it tallied here in the platform. So you're going to see invested £10,290 right here, but really it's £5,500 was the original investment amount. So you can see £12,521. A lot of this, again, some research, but a lot of luck on the side of the stock picks that have been doing well. We've got a couple of bad ones in here. Again, Aurora Cannabis still in the red. It's such a small amount of the portfolio. I don't really see much point in selling it at this point unless some news comes out about people have decided to stop smoking marijuana, which I don't see. And this has been a great part of the portfolio here. Bonanza Creek Energy up 40%. Centrus Energy down 17%. Ceres Power Holdings 5.58%. You can see very, very heavy in commodities. I think oil is probably going to approach anywhere from 85 to 100 US dollars by the end of the year. So just really kind of going all in on the commodities side. You can see here our big winner, Laredo Petroleum, almost doubled. US companies, pretty big. Look at the charts. We've had a pretty good week here. See down here we started at about $49 and we've come all the way up to $56. So having a really good week for oil. In that stock we paid an average price of just $27.57. So we got in at a very good entry point. Again, same with Lloyds Bank in at 25.39p. Very close to doubling on that one too. Again, just good market timing. Nothing really known at that point. When I looked at the stock price, I thought, wow, 25p. I mean, 25p, you just can't really think that Lloyd's was a bad investment at that price. And it's turned out to be true. How high that can go, I don't know. You know, I'd like to see it maybe get back up to 60, 65, and then that might be an exit point. I remember my brother-in-law was owning this Lloyds Bank stock when it was 75p. Could it get back to there? Yeah, probably at some point, but it's also not a bad place to be taking profits. Even at this point, might be time to start exiting out. And same with the Laredo. How much more upside there is in this oil stock, it's kind of hard to tell, but if oil prices do continue to continue to rise, then probably Laredo is going to have a very good year. Here's one of our bum ones right here. We got Microvision, which we happened to buy in at a bad point. Paid an average of $21.97 US cents, and we're as you can see down to $15 again. Another sort of a high risk play with laser beam technology for autonomous driving cars. I thought, maybe this is going to be a company that would break out and begin offering their technology, but it certainly hasn't panned out in the short term so well. This is a small pickup that we did this week, and actually if I had more cash available, I would have gone higher into this, but this was Olin. This is a U.S. manufacturer and distribution company of chemical products and ammunition. I mean, what a great blending together, right? Chemicals, ammo. As much as the United States likes to war with people, that's a pretty good play. Has a small dividend yield too of 1.71%, so that's a little bit of an extra reason to own it, but I think there's some upside on the stock price of Olin, so I decided to go ahead and take a small position, and if any of this stuff gets sold out here, any of these profit-taking moves of Laredo or Lloyd's, or even dumping one of these stocks that are in the red, likely Aurora, maybe Microvision, then that money would have gone into Olin. And then Tullow Oil, again, small risky oil play, UK based. I put a little bit more into that last, I think it was a couple of weeks ago. but not really seeing a great performance out of them so far. But again, if oil prices continue, commodities do well, then I think this stock will take off at some point. So that's what's going on with the portfolio so far. Let's look at the news. Funding Circle becomes the first peer-to-peer lender accredited for the RLS. That's such a mouthful. That's the Recovery Loan Scheme, which is the follow-up to the CBILS lending that the government is offering for support of new businesses. So again, if there was ever a case that Funding Circle would completely become non-retail peer-to-peer lending, I think this shows exactly where Funding Circle is going. I'd like to look at the Funding Circle stock price too, because I haven't seen it in a while. I know I always rip on. Let's see where we are. Can we? It is what, 155.60, which is way down from its original. Where was it? Over 400. So still struggling, but it's definitely better than where it was at. Well, I think it was at 51 at one point. So if you got in at 51, that was a great entry point. But very risky stock play, I think, with Funding Circle. But they become the first peer-to-peer lender to be accredited. So they will be underwriting, I'm sure, thousands of loans to UK businesses, small businesses, and that's something that's really needed. I'm sure it'll pad the bottom line of the company itself, so maybe the stock price will continue to do well. I have my doubts. I think they're going to be running at a big loss for a while. So is that a good stock play? It's not something I would invest money into, but good for Funding Circle to become the first accredited peer-to-peer lender. London Capital and Finance bondholders looking to crowdfund to save their FSCS legal battle. So obviously the collapsed bond company that has taken hundreds of millions of pounds away from investors when they collapse. So there's, I think, four major bondholders who are trying to have this court process continue against the FSCS to try to recover some of that money that's been lost. And obviously that's a very expensive affair. I mean, whenever you try to battle in the court systems, you're looking at a lot of financial input. So let's see, the bondholders said by refusing to agree not to pursue costs against the four of them personally, if an appeal is unsuccessful, the FSCS is stifling the possibility of an appeal going ahead. So what they're saying is if they go to court and lose, the winning party could go after the four of them for court fees, which could be incredibly expensive. So that may be why they don't want to go ahead with the appeal right now, but they are looking to crowdfund to get those legal fees together to really try to go after an appeal, which is likely, it says, worth to be approximately £25 million in the aggregate to London Capital and Finance investors and around £70 million to the taxpayer. I don't know how much it would cost to take something like that to court, but again, this is a problem with the legal system, right? You have to come up with that money if you want to fight anything nowadays. And same thing is going on with the Funding Secure situation, with the Lendy situation. Wellesley, likely you're going to have to come up with that money for legal fees, and crowdfunding is a pretty good way to do it. Lendy administration heads into its third year. This is, I'm really would like to see some reform in this administration process, because I think that the administrators can just really drag these things on and on and on, and they have no real benefit to wrapping it up quickly. I mean, if they're billing hourly, and they can drag it on, it's kind of like a divorce lawyer, right? He doesn't make money if he gets that divorce wrapped up quickly. If the negotiations are over in the first meeting of a divorce lawyer doesn't get paid. So who is the administrator really on the side of at the end of the day? Are they in the side of themselves to generate as many fees as possible, or are they really on the side of the investor or the creditor? I think this side of the industry really needs some caps and some reforms, because these legal fees that are going to be racked up by RSM is going to be huge, and inevitably that just comes out of the pocket of any potential recuperation that the investors could get. So we're heading into the third year. It's not looking like this thing's going to get wrapped up. Last December, RSM warned that the process could even overshoot the 2023 deadline. I mean, we're talking about 2 years from now, and if they're saying it could overshoot the 2023 deadline, again, are they really pushing for this thing to be wrapped up quickly so the fees can be reduced in this Lendy administration? I have my doubts. There needs to be some caps on these administration situations. So we've had all these scandals and all of these problems with Liam Brooke and Tim Gordon. I really hope that the waterfall situation is sorted out with that, because it would be very criminal to see any money go into the hands of the Lendy directors after this administration is finished and finalized. The FCA is also, they get a lot to answer for too. What did they really know? Who knows? But at the end of the day, the investors are the ones that get the spanking, unfortunately. So we got a new court date set for the Funding Secure fee dispute. Again, this is another administration, Funding Secure, trying to keep a piece of the redemption fee of each loan. They're arguing that it should be 5% fee should be on the total loan amount, which I think is absolutely ridiculous. That fee, for one thing, is ridiculous to begin with, but then to say it should be on the total loan amount, no. It should be on anything recovered. Funding Secure have argued that the fee should be paid on the entire value of the loan before payment to investors. However, a representative group of investors, that's the Action Group, if you haven't joined them, go on Facebook and join them, the Funding Secure Action Group. You can find them, very easy. However, a representative group of investors were able to provide proof that the platform had indicated, both in its terms and conditions and in investor correspondence, that investor capital would be prioritized. In March, a judge ruled that investor capital should be the first to be repaid. Thank goodness. There are still some judges that are on the up and up, followed by investor interest, and then Funding Secure's 5% redemption fee, which is essentially, that's absolutely the way it should be done. Absolutely. And I would like to see Funding Secure get zero. I think that would be the really right thing to do. Pay the investors back first, pay the creditors back, after that, or whichever order that goes in. We've had a report, CG & Co., which is the administrator, says that they've recovered $6.5 million in the 6-month period, taking the total realizations to $23.4 million. There are still a remaining 95 defaulted loans to recover, with $47.7 million invested, but there's no indication of when this will complete. Of course not. Number one, they probably don't know, and number two, again, the administrator probably has a benefit to dragging this out as long as possible so they can rack up a nice amount of fees. So, what else we got? And then another Funding Secure news: the administrator suspends investors' payments amid a legal claim. So an anonymous person is going to court. He is an unnamed creditor. CG & Co., which is the administrator again, said the creditor has made a claim relating to money in the client account, that is in Funding Secure's bank account and cash, under a legal term called a quick close trust. Under this term, a creditor can lend money to a debtor, which is Funding Secure in this case, for a particular purpose. The money cannot be spent for any other purpose and will have to be returned if it is misused. So now everything again is going into an investigation. Further repayments to investors in the way of form of distributions have been paused. Just more of a shite show, which is the funding secure situation. What's good is a representative, a group of investors were able to find proof that Funding Secure has indicated in its terms and conditions and in investor correspondence that investor capital would be prioritized. I think that Funding Secure is going to be in a losing position on that one if the terms and conditions state what they state. Yeah. So there you go. That's what a mess, though. These administrations have just become such a mess. Collateral, Wellesley & Co., the House Crowd, Lendy, Funding Secure. We just don't want to see any more of these. Now we got the side subsidiary of Thin Cats. So the market is getting contracted, the peer-to-peer lending market contracting in, getting rid of the bad. Hopefully the good prevails, and hopefully everybody was diversified and didn't have too much money in any single one of these companies, because just like when you're investing in stocks or shares or a cryptocurrency, you want to make sure you have some diversification. You don't want all of your eggs into one basket. This is an interesting piece of news. The fifth of young people use social media for financial advice. There's still a lot of miseducation when it comes to finance and what's going on. Let's see, 1 in 4 Brits don't have a confident understanding of their personal finances. Well, almost half don't understand key financial terms such as overdraft, mortgage, and arrears. If you don't know what the word mortgage is, I mean, that's kind of concerning. 84% of Brits think that being taught about finances at school could help prevent financial issues in the future. Totally 100%, 150% agree. I've always said the two things that we struggle with most in life is relationships of the love nature, which is why there's this high divorce rate, and also financial education, neither of which are taught in most schools. There are some programs out there now that are being introduced to really educate young people on finances, but I think that's an absolute must inside of schools nowadays, that if people don't know what the word overdraft is, mortgage, and arrears, this is a really big problem. More surprisingly, when asked where they would go for financial advice, more than a third said they would go to their bank. Their bank. I mean, oh, what a terrible place to go get financial advice from. It's such an archaic place to have your money invested. I mean, if you got no other options, you don't trust anybody else, go to a bank. But what they're going to do is they're going to put you in some funds that you're not going to want to be in, and they're going to charge you some serious fees for doing so. I'd honestly rather go see a financial advisor than a bank, even though I don't think either one is necessarily a good choice. It said 35% of people polled would see a financial advisor, 30% would use Google searches, while 27% rely on family and friends for advice, and 9% use social media. Yeah, again, financial world completely overcomplicated. Thousands and thousands of options, of investment options, which makes people confused, and there's no surprise that people are going to their bank to get financial advice because they don't understand how simple investing really can be. If you are somebody who's confused about that, read the book, John Bogle, The Little Book of Common Sense Investing. I think hands down one of the easiest way to learn that you can get started investing, just using simple tracker funds, which is going to take care of you for the most part. Could be all of your lifetime, where you don't need to go to banks and financial advisors unless you have some serious tax complications or things tax-wise that you want to sort out for your family. But yeah, read that book. That's a great book. The research suggested that social media is becoming increasingly influential among the young generation. I mean, we're seeing this with the cryptocurrency, with the meme stocks, GameStop, AMC, what happened with these Dogecoins. So that's all pushed by social media influencers. So interesting. Just a fifth of those aged 16 to 25 knew what an overdraft was. Yeah, they're really uneducated. It seems like, at least that section of who they polled. We don't know who those people were. First-time investors are cautious but in for the long term. Survey of 1,129 active investors by Freetrade found out that new users have not started investing due to lockdown boredom, and instead are in it for the long term. I don't really even understand what that means. Maybe it means that they're not looking to trade. It's kind of unclear. One thing that I read on this article, which was kind of a little bit scary, was these are more common in short-term goals as saving for a major one-off purchase. So people were investing for one-off purchases like a holiday or a major one-off purchase, which is a really bad idea. I mean, investing for short-term reasons like that is very risky, because if the stock market takes a dump, then you're going to have a hard time keeping your balance at what it started at. Capital preservation is really important for short-term investing. 91% of respondents said they lack confidence before investing. So again, this just is sort of the same old narrative of people just not really being informed. So let's see how we are with the time, because again, I want to keep this relatively short today. Ooh, 35 minutes. Okay. Yeah, if you have questions, again, put them in the comments. We'll do a Q&A at the end, do a little cryptocurrency. Here we go. The House crowd will not form an action committee. So there was a talk of the House crowd creditors forming an action committee, but they decided against it, and they've opted not to form a dedicated action group, and they've agreed to back the joint administrator's proposal instead. Investors were not asked for feedback or whether or not a committee should be established. No creditors attended the meeting, and none of the company's creditors requested that a committee be established. Have to wait and see what's going on with the House crowd. It's going to be a while before anything happens with that. Assets Capital to resume lending within 2 weeks. So there we go. We've got that news out there. It's been paused for a long time. So they'll start their lending up. If you're somebody who likes to pick out manual loans, you'll be able to do that within a couple of weeks. That was on May 21st, so we should be probably within a week out. They are not abandoning retail, so they still want to service, you and I as peer-to-peer lending customers to be able to continue to invest. It says if we don't have a huge demand for retail and the market doesn't want what we produce, we'll stop producing for them. The decision is in the hands of retail investors. We're not changing our plan. We're very happy to originate for retail. So, right now they still want to continue retail peer-to-peer lending. This was interesting. Misleading Bitcoin ad banned from the London Underground. It said if you're seeing Bitcoin on the Underground, it's time to buy. The Advertising Standards Authority, ESA, said there was complaints against this Luno Money's ad. I don't know who that is. Never heard of them. Said the ad gave the impression that Bitcoin investment was straightforward and accessible, when in fact it's unregulated, complex, and volatile, and that it is an irresponsible ad. There's definitely no risk warnings on here, which is the first thing that I noticed, so I'm not surprised that some people are a little upset about that ad. The ASA said that the general public would expect that the exchange of Bitcoin would be regulated with legal protection in place for investment activities. I think that's a bit of a reach. How does the ASA know what the general public expects? I mean, some people are informed. Some people know that Bitcoin is not regulated. Is that ad supposed to say that? Maybe they should have a little fine print at the bottom here that shows that. That seems like a bit of a reaching statement, of course, all of those things being true. So that ad has been pulled and will probably not be back in the underground anytime soon. I made a phone call to Barclays this week. My bank account got locked out, as it sometimes does, and the representative kind of said to me under his voice, he said, "Hey, do you mind me asking which cryptocurrency do you invest in?" Because my bank account got blocked because I was trying to deposit money in Coinbase to buy some Bitcoin during the dip, which I was not able to do. I actually went in, when Bitcoin hit 30,000 US dollars, I thought, oh, this is a great buying point. So I tried to put some money in the account via Barclays, and of course it gets locked. And it was on the weekend. And anyway, so I call up and he says, "Yeah, which cryptocurrency are you buying?" And I said, "Oh, I usually tend to stick to the big caps, Bitcoin and Ethereum." And then he said to me, "Oh, I've been buying these doggy coins and these Shiba Inus." And I thought, oh, that would have been a great conversation to have 2 weeks ago, because when the guy at the bank answering the phone calls is asking me things like that, there's a problem. When everybody's piling in, you generally have to be a little bit careful about that. Of course, a lot of people had some severe losses over the cryptocurrency space because they sold out and they didn't understand what was going on with the markets, and then proceeded to sell, and it bounced right back out. A quick shout out today to Kuflink, who is our sponsor of the YouTube channel and a good supporter of the Financial Thing website. Sign up today. You can receive up to £4,000 cash back on your first investments. Terms and conditions apply. Your capital is at risk. Thank you to Kuflink for being a supporter of Financial Thing. And you can sign up at my link. You can go to the Financial Thing website under cashback and look for the Kuflink link, or go to join.kuflink.com/financial-thing. Thank you again to Kuflink, who's always been very supportive. And we've had, of course, Narinder here, the CEO, a couple of times, who's always very transparent. We like to get him on every few months just to do an update in the peer-to-peer world. But we're going to talk about a little bit what happened with Bitcoin, what happened with the crypto market. We saw these big dumps recently, which if we look at CoinMarketCom, for instance, right now Bitcoin's dominance 42.5%. So 42.5% of all cryptocurrency out there right now is dominated by Bitcoin. We had this massive drop for anybody that bought within the last month. They probably were a little bit freaking out. We've seen this big drop off here, and from all the way up from 58,000 US dollars, people thought we were going to hit that 60,000 US dollar point. And then here we see this big decline down to 32,000, which I saw it go as low as 30,000 on Coinbase. And then we saw a bit of a pop, and then another drop down to $32,000, which is a great buying point. And then over the last week, we've just kind of seen this, the price eclipsing 40,000 US, but really struggling to get over this $40,000 support level, and seeing it go right back down here, again representing a great buying opportunity, I thought. And I think we might just see this sort of going back and forth situation now for the next maybe month or so. Of course, who knows, right, at the end of the day. But what was very interesting was, while people were saying that Bitcoin was done, this is the real story here. We had the whales. And these are the people that really manipulate the markets, because they want to buy Bitcoin as cheaply as possible. So whales bought $3 billion of Bitcoin when its price fell, says Chain Analysis. If you want to read this story, you can just Google it. And there is a report. It's a pretty extensive market report here, which is all the statistics of where this story came from. But we saw 77,000 Bitcoins purchased when the price dropped. So while everybody else, the blood was in the streets, the smart people were in there buying and accumulating. Hedge funds and asset managers were buying the dip, particularly in the Bitcoin's $30,000 to $35,000 price range, and here we go. This is really sad. 1.2 million bitcoins were sent to the platforms at a 5 to 25% loss, with 120,000 bitcoins being moved at a 25% loss or worse. So what that means is 1.3, just over 1.3 million bitcoins were sold during this downturn period for big losses. And if you know anything, about crashes like this, you just don't want to be selling. What happened was investors who are very green got fearful, and just like during a stock market crash, like in March of last year, 2020, a lot of people sold out of their stocks. They were fearful. They thought the markets were going to go a lot lower, so they ended up selling out and made some really big market timing mistakes. And this is the same here with what happened with Bitcoin. Green investors got scared and they end up selling for a loss. Smart investors were buying and accumulating because they know that these dips are just part of what comes along with cryptocurrency. It's going to continue to happen, and this will not be the last time that we'll see these volatile dips. We've been seeing it for ever since Bitcoin was created. As we've said here, you see these dips happening. Sometimes Bitcoin has lost 50-60% of its value in just a couple of days, and it will probably likely to be that volatile before we get this push. What's going to happen is a lot of people will get out of these small coins, these ones that you probably might never have heard of, all these ones on these lists that people are taking bigger risks on. They're pouring money into that. The smart money will eventually come out of these risky coins and go into the safety of Bitcoin and Ethereum. And that's why you saw that big uptick in Bitcoin, where we saw it come back from here. This is where people come in to the market, and these are people that we call hodlers. They hold, right, because they're holding long term. They understand what Bitcoin is about. So the scared investors are selling right here, and the smart investors are accumulating and holding, and they're not selling anything. You've seen stories about billionaires who've said we have not sold even a single dollar or pound of Bitcoin because we are accumulating and not selling anything. So very interesting report about whales. One going in 77,000 Bitcoins purchased, worth over $3 billion during the dip. So smart money going in. This is a Lendy update that we got from RSM that shows just how little of realizations are coming in from these recovered loans. We can see right down here, 4.2 million pound asset realization contractually that went to the lenders, 1.18 million pounds. This is what Lendy is supposed to get. Okay, service 3 of 339,000 pounds, and then the beautiful one right here, 1.5 million pounds Lendy contractual entitlement fee. So I'm sure hopefully with the court process, that will not be given to Lendy, because that would be criminal. But again, these numbers are what's coming out from the administration. You can see just what those fee breakdowns are. What else we got? Let's see what the time is here. 48 minutes. Okay. We've seen a couple of interesting. Fidelity, the fund giant investment firm, attracted 102 million pounds in the first 9 months for their Bitcoin fund. To me, that didn't sound like a lot, but what was interesting, that was only made up of 83 investors who put in a minimum of $50,000 each. So those are pretty big amounts of money to go into a Bitcoin fund. So it shows that it's been relatively successful. We got Morgan Stanley with their Bitcoin fund that managed to accumulate $29.4 million in the first 2 weeks. I think you're going to see when Fidelity launches this more broadly available Bitcoin exchange fund, which is an ETF, under Wise Origin, you'll just see a lot more money coming into the Bitcoin space. But it's interesting that these companies are starting to really take on cryptocurrency in that way. And then there was an interesting article that said, forget Bitcoin and Ethereum. These are the 10 best cryptocurrency Redditors are buying. I don't know that some of these coins, they're just pretty high risk. Elrond, USD coin, Stellar Lumens, that's a payment play. Chainlink, which I own, Litecoin. What else? Binance coin, which is used mainly to pay the fees when people do Binance trades on the Binance platform. Come on. Ripple, which is involved in the SEC lawsuit, which we'll see if that gets cleared up. I think the Ripple has a chance to really take off. Let's see, this website is super slow. And then we got Cardano. This is a payment blockchain, which has been deployed in Africa. We'll see what happens with that. People love the CEO of Cardano. And then Polkadot, another payment system, Bitcoin Cash, which is a spin-off of Bitcoin itself. And if you look at what's going on with the top cryptocurrencies right now, you're going to see these payment ones. Ripple right here with a $45 billion market cap. Again, Cardano, Polkadot. These are all payment system plays that are designed to take on Ethereum, which has these huge fees at the moment because it's expensive. Actually, it's come down a little bit. You can see up here the gas fees of Ethereum have started to move down. But yeah, I take these articles with a pinch of salt, because I think when you're getting into some of these coins, and especially out of the top 10, you are taking on some risk. Certainly you want to have, I think, at least 50 or 60% of your money into Bitcoin and some Ethereum, but the rest of them, yeah, be wary. I mean, you've seen some big drops. It was a great time to buy last week. We saw just some of these coins, just massive buying opportunities. If you had the courage to go in, that was the key. A lot of people didn't. A lot of people didn't have the courage to go in. But people who did were able to pick up these coins like Polkadot, which is a high of about almost $50 US, dropped right down to 16. I mean, some major buying opportunities, even just in Ethereum itself. Really great buying opportunities. If you were at the high of $4,329 and you were able to pick it up right down here at 1900 US, I still believe wholeheartedly that Ethereum is going to be a 10,000 US dollar or greater coin, maybe 20,000. So you're picking it up down here at 1900. Still sounds expensive. Still sounds expensive if you look to a year ago, but where it was in the 500s all the way down to the 200s, but represents a great buying opportunity, I think, at 1900. We'll see what happens in the future. And yeah, so that's what we got this week for the news. Again, I think that this cryptocurrency dip is just a part of the process, and we see it time and time again. It just bounce, and that will continue. And the people that understand what these cryptocurrency blockchain companies are doing and what Bitcoin was designed to do, and the people that held on and didn't sell because they are long-term holders, which I think, unless you're an advanced trader and you just want to try to gamble and go with luck on your side, not something I recommend. But the people who are the long-term holders really understand what the crypto market is about, and they are long-term buyers and holders. They will be the people that benefit in the future, and the other investors are just going to get washed out by, as they call in the industry, paper hands. They just get scared, and when the markets are dropping, they sell. There are some tax positions that you can use to sell at a loss and rebuy, but again, it's not something I dabble in. I'm not a trader. I just buy and hold them in the accumulation phase, with the hopes that Bitcoin one day will be a high six-figure coin. So there you go. We'll do a little Q&A and then we'll get out of here. If you have questions or comments, put them in the stream. Yes, this is the Grimsby Town, old school. I don't know how old this shirt is. I mean, I'm thinking it's got to be from the 1980s. I tell you what, it's held up well. 40 years. 40 years and this shirt is still like the very first day that my sister bought this. Let's see. Blend has a new loan to develop 19 new houses located on the in-place north side close Sutherland. Absolutely. Your shaky legs bruised. I do have shaky legs today. I don't know why. Annabelle is here from Spain. Hola a todos. How are you? Keep it under 1 hour. I'm going to show you today that I'll keep it under an hour. Please hit those thumbs up if you can. LoanPad is doing well. Let's see. Question is the Yanks like to say. What, question? Is that a Yank thing? I think it's a kind of a world thing. Can you remind us of your top 5 or 6 peer-to-peer lending companies? Yes. As we stand today, it would be LoanPad. It would be... I don't put LendInvest. I mean, they're not technically peer-to-peer, but they're still... I'll have to say investment companies then. So LendInvest, I think, is solid. I think Crowd Property is solid. I think Unbolted, as long as they stick to what they're doing, is solid. I do like Lendery. I still haven't done that. I can't put them in the top 5 yet because we're still very early days, but I like what they're doing. Blend Network for sure would be in there, but I don't invest through Blend at the moment. And that would probably be my top at the moment. I think I look more... This shirt to me also seems more of a referee shirt. I don't know why it's... I don't know why it's like that. Okay, the judge said that it was on the total loan amount as per the terms. Okay, well that sucks. Robert Pace got mine out of Wellesley just in time. Robert also says financial education at school is a must. Absolutely. AMC is shooting up. Yeah, it is all from the Wall Street bets accumulations because they want to stick it to the short sellers. They have close to 10.8 million members now on that Reddit forum. Doesn't take much now if they all band together to buy one of these stocks to really send it shooting up. So fundamentals are definitely not there. Annabelle says, getting fed up waiting for new investments to be available on Kuflink, so withdrawing my cash now to other peer-to-peer companies, victim of their own success, it seems. Yeah, I mean, as the contraction of the peer-to-peer industry happens, you get rid of the bad companies. That money that people would have had to invest through those companies, maybe that they withdrew from, comes into places that have a good track record like the ones we mentioned, and then demand of money becomes greater than the supply of loans. Carful, how do I get a pension which includes peer-to-peer? You'd have to look into SIPs, things like that. It's not so easy. We could talk about that maybe next week. I can do a little bit of research on that for you. David Dawson is here. Nice to see you. Better late than never. Yes, absolutely. Maybe we should say if you're seeing ads everywhere for Bitcoin, it's time to sell. No, I don't think so. I don't think so. Hey, I pray that Bitcoin goes down to $5,000. I really do. Because if Bitcoin drops that low, that'll be a once-in-a-lifetime opportunity for people to get in on generational wealth. That's my view. This is not financial advice, but that would be... If it went down that low, I think it was Mark Mason who said I would back the trucks up and load up. For sure. Oh yeah, assets capital too. I totally missed that off my top list. Yes, they would be in there. I think PropLend is decent too. Assets Exchange again. I usually don't like to plug companies if I haven't invested with them myself, and I haven't invested for at least a year. Lawrence, besides your own, which other YouTube channels do you like to listen to as far as crypto is concerned? My favorite is Crypto Banter. I like BitBoy. I like Cryptos Are Us, because he has a really funny tagline. He goes, "I'm George, we're all George." I don't know what that means, but he's got some good insights on cryptocurrency. And then MM Crypto's okay, but he's all about trading. And I do take what some of these crypto people say with a pinch of salt, because they have a lot of affiliate links and they make money off when people trade. Dave said Kuflink often puts new investments on a Friday, so it's worth checking around 3 p.m. onwards on a Friday. Looks like Elon is trying to call Lawrence. I wish. That'd be nice. Anyone else using Binance as a crypto platform? Yes, I use Binance. I'm going to be putting up a video. I've actually just made it yesterday on how to trade and buy crypto on Binance. It's a little bit harder to use than Coinbase, but however, if you have a limited company and you want to buy Bitcoin through your limited company, you can do that on Binance. So I'm just going through the application process right now. We'll see what it's supposed to be a 7-day approval though, so it's not fast. But yeah, I do use Binance, and the fees are a lot cheaper than Coinbase. But the damn thing that I cannot stand about Binance, it just doesn't show you on your coin breakdown where you are plus and minus profit and loss. It's the most annoying thing that they've just missed. And I don't understand if that was done on purpose, or maybe they don't want people to see how much money they've made or lost, and that was done by design. So that's one of the reasons I just don't like Binance. I saw something earlier about Apple maybe entering the crypto market. Yes, there was a news story about that. Apple has posted an ad on their website. Let's see if I can pull it up. Here we go. Yeah, and this was all over the cryptocurrency news, that in California, business development manager for alternative payments. They're looking for somebody who will head up the crypto payments right here. 5 years experience working with alternative payment providers such as digital wallets, BNPL, fast payments, and cryptocurrency. I mean, what this says is, again, this is the future of where we're going to be going with online payments and blockchain technology. And if Apple does say we're taking crypto payments as a payment for Apple products, then you're just going to see that cryptocurrency price. So this was relevant news. We just don't know how far out Apple is away from making this into reality, but it's an interesting development. But Debbie says she uses Binance, but Kraken is much easier to use. Yeah, I find Coinbase easier. I don't know. It's not easier on Pro, but it's easier if you use Coinbase regular. But you're also going to pay more fees. Mike says, be aware Capital Rise isn't peer-to-peer and has some FCA restrictions in place currently. You can use Binance Lite too. Kraken is okay. I do have a Kraken account. SEC potentially looking at Tether next. Yeah, I mean, Tether's been getting their wrist slapped for a while. So Not concerned about it. And all these stories, by the way, that are coming out with China, Iran, I think it was announced today in the news. There's some, let's see here, what we got in the news. You probably can't see this, but Iran bans Bitcoin mining. Yeah, I mean, who cares, right? And to be honest, if China does ban Bitcoin mining, which I don't think they will, I think they'll ban it for maybe a period of time. But all that'll happen if China bans it is the miners in the US and in other countries will take up the slack. And yeah, that's really all it means. It's really insignificant news. It's old news. This is 3-year-old news that's been put out there. This is what happens within cryptocurrency. You get this old news that gets recycled in order to push the price down. You'd be surprised what the whales have some pushing power. They can get news stories released. Journalists get paid to release these news stories, and when the price of Bitcoin gets depressed, the whales come in and buy. We saw it happen. Last week during the crash. So it's all FUD. This whole Elon stuff, fake news. It's easy now picking the bottom, but how do you know at the time it is the bottom? You don't. That's why you dollar or pound cost average. If you want to buy cryptocurrency, you think it's an asset that you want to hold, you go in during the dips and you go in during the higher points, and then it all averages out. It's just like buying stocks. Nobody knows what the price of it's going to be. I bought Bitcoin at $55,000. I bought it at $33,000. So I bought it at $18,000. At least the shirt still fits. It does still fit. That's good. What? Oh, I didn't mention Kuflink too. On yeah. Okay. Let me redo my top 5. It's LoanPad. We got Kuflink. We got Assets Capital. We've got Crowd Property and Unbolted, and then the others Lend Invest and Blend. I would say good. I don't have my top 5 in front of me. Archover I do not invest in. Don't have any experience with them. Oh, Negan. We were all Negan. Walking Dead. Didn't know. Okay. That's it. 1 hour and 7 minutes. We were close. No cigar. We tried to make it. Hope everybody enjoyed the stream this week. We'll be back next Thursday with Peter Reed from Assets Exchange. Come and learn about him and what he's doing. I invited him to come on because I like what he's doing. When I spoke to him, I thought it was interesting. Something you might want to take a look at. And please, again, subscribe. Join our Facebook group. If you haven't already joined the Facebook group, you can. There's the little message banner at the bottom. Just search for Financial Thing on Facebook. Come hang out with us and talk about the weather or whatever you want to talk about. And yeah, subscribe if you haven't. Don't forget to visit Kuflink and score yourself a nice amount of cash back. And we will see you next week. AMC is up 45% today. I know everything is crazy. How about a peer-to-peer top 10 or 8? I don't know. Maybe. I want to try to keep it top 5, maybe top 6. We'll see you next week. Have a great weekend. Be safe out there. And thanks again for spending your Thursday evening with us. Go to financialthing.com. I'll be updating the reviews over the next week too to get those more up to date. Take care. Adios. Ciao. See you later. Cheers. Bye.